looking at the earnings for Apple. Apple smashed its earnings. Apple is proving to be a recession-proof. Given the inflation, the high interest rate, supply chain issues, COVID lockdown in China, Apple smashed its earnings. Why are they beating their earnings? The iPhone sales is still up. The laptop, and the Mac, their services, everything is still going as expected. Apple is proving to be a recession-proof business. They're still the leading. They're actually going back to a $3 trillion business. The revenue is 83 billion. 83 billion. What was expected was 82.76 billion. The EPS is $1.20. The analyst expectation is $1.16. Apple is still the leading. They are still doing extremely well. I mean, look at myself. This is an iPhone 11. This is my old iPhone 6 Plus or so. And this is my favorite one of those X or something. You know, they're still doing well because we're still buying their product. Their products is quality. They're giving good services. I have a different account. I have an account for Elite Pro Investment, which we host our app. You know, I pay for cloud services, a lot of other things, just like many of you. So Apple is doing well. If you're a Apple shareholder, you should be happy. You should be excited by now. The stock has risen up about 5 or 6%. I think it's trading currently around 162. Some few days ago it was 162. So a few days ago it was around 153 or 154. You know, so the price target for Apple is around 185. So you see, let's have a look at the chart. Let's have a look at the earnings details. You know, let's see which part of the business is actually providing more, more revenue. And let's see which one is doing better than the other. But overall, as a company, Apple is doing well. Let's have a look at the chart. Let's have a look at the price action. Here is a summary of Apple earnings. This is on CNBC. Apple beats on revenue and profit. Expect growth to accelerate despite pocket of softness. Now, you can easily see the key point here. Apple reported physical third quarter earnings on Thursday that beat Wall Street expectation for sales and profit, but showed slowing growth for the iPhone maker. Apple did not provide formal guidance for the quarter. In terms of an outlook in the aggregate, we expect revenue to accelerate in the September quarter, despite seeing some pocket of softness. Apple CEO Tim Cook told CNBC Steve Kovac. Here is about the earnings alert on CNBC. Apple reported physical third quarter on Thursday beat Wall Street. Apple stock rose over 3% in extended trading. Here are the key numbers compared to Wall Street, what Wall Street was expecting. The key numbers here, as you can see, the EPS is $1.20. What was expected is $1.16, down 8% year over year. Revenue is 83 billion versus 82.81 billion, estimated up 2% year over year. At the iPhone revenue, 40.6 billion. What was expected was 38.33 billion, up 3% year over year. Services revenue, 19.60 billion. Here was what was expected is 19.70 billion, 12% up 12% year over year. Other product revenue 8.08 billion, 8.86 billion estimated, down 8%. Mark revenue 7.38 billion. What was expected is 8.70 billion, down about 10%. iPad revenue 7.22 billion. What was expected is 6.9 billion, down 2% year over year. Gross margin 43.26. What the expected is 42.61 estimated. Apple did not provide formal guidance for the quarter. Analysts expected the company to give fourth quarter guidance of $1.31 in earnings per share and nearly 90 billion in sales. In terms of an outlook in the aggregate, we expect revenue to accelerate in the September quarter, despite seeing some pocket of softness. Apple CEO Tim Cook told CNBC Steve Kovach Apple revenue rose 2% during the quarter compared to 36% growth during the same period last year and over 8% growth in the March quarter. Cook said the results were better than expected, and the CFO, Mr. Matosi, said it was a challenging operating environment. Here is a technical chart for Apple. Let's start with the fundamental information here. The EPS rating is 84. The PE ratio is 26. That is four times. The market cap is 2.2630.25 billion. That's approaching 3 billion. Shares is 16.2 billion. Funds have 28%. Um, these are the EPS in the past years and the coming year estimate. Um, Here you have the price as 162.51. Let's have a look at the weekly chart. Weekly chart has more information for the more fundamental information. So here is the weekly chart. Um, Here, as you can see, the 52 weeks high and low. 52 weeks high is 182.94, while the 52 weeks low is 129. Um, Apple is trading 11.2% of the 52 weeks high. The shares outstanding is 16.2. Shares the float is at 16023.3 billion. The market capitalization is 2.6 trillion, as I said earlier. 5 year P range is between 12 and 42. The EPS rating is 22%. Also, the current earnings, you can see reported June 22, 1.2 dollar compared to last year 1.3. So it's about minus 8%. That's the changes is minus 8%. The earning surprise is 0.04. Let's have a look at the checklist here. The Warren Buffett checklist 14 out of 16. So it passed 14 out of 16. Let's have a look at the Benjamin Graham's. Benjamin Graham's 9 out of 13. Peter Lynch. Peter Lynch 3 out of 8. Wow, 3 out of 8. So the industry, the owners that you have 28% fund, bank is 1%, insurance company is 5%, and the industry is telecom, consumer product. Also, now let's delve into the technical chart. As you can see, without saying much, this is an upward trending stock. Let's start with this. As you can see here, this is down here. As you can see, As you can see, this way, Apple is an upward trending stock. Also, because we're in the bear market since the beginning of this year, so you can see here since the beginning of this year we're in bear market, but it is starting to have a bullish move, as you can see. In fact, uh, you can even call this a double bottom. So, but we're not out of the wood here. We're still within the bear market. Let's have a look at it on a um, daily daily chart. See, on a daily chart, as you can see, there is significant move here downward, and then here, as you can see, we can still see the element of the double bottom one way or the other here. See, so this Apple is starting to look bullish. There has been some bullish move lately, which you can see. The Apple target price is about 185, but the current price is 162.51. Be careful on the about these stocks. Apple is tilting towards becoming, attaining the $3 trillion company. It was the first American company to reach $3 trillion, and due to the bear market, it pulled back, but it's about to be going in that direction again. You have seen the details of the earnings and you have seen the price action. Um, yeah, Apple target share target is around 185, but be careful. Do not just run and buy Apple because you're watching this video on YouTube. You need to do your analysis, carry out your own valuation. Be sure that use one of the metrics you see on our channel. You can use Warren Buffett, Peter Lynch, also, or create your own. Please do not just buy stock because you watch a YouTube channel. Thank you for watching this channel. Thank you for subscribing. We continue to produce content that will support your investment journey. Please call again.